Hi, this is Atmir with the Bulletin Board Heroes here at Box Markets for Monday, the 20th of February. Starting off with the FTSE 100 as usual, where we've flipped back above the 8,000 level that maybe a lot of people didn't think was going to happen, but support looking as though it's in the 15, or rather the 79.50 to 79.60 area. RSI a bit over on the overbought side, but nothing too excessive at this stage. That does allow us a possibility of a move up within that rising trend channel from September up to 8,200, perhaps as soon as the end of next month. But ideally, we stay above 79.50. Below that, it's down to the floor of that rising trend channel at 7,800, which obviously would be a bit disappointing after recent gains. Moving along to the DAX, which has not been quite as heroic as the FTSE, but still good start to the week, or a better start to the week. A lot of support there at around 15,200. Next level, obviously 15,600, which was recent resistance, and the big prize to hit 16,300 or 400 by the end of next month at the top of that rising September trend channel. Ideally, there's no price action here now below 15,000 in the floor of that rising trend channel from the autumn. Moving on to the Dow, which still has us on tenterhooks in terms of which way it's going to go. It should be the case that we're bouncing off the 50-day line, the blue line there, and then heading higher. And we've also really been doing that on the RSI window as well, either bouncing towards RSI 50 or just below and then recovering. But the easy view here is to take that we are looking at a range between the 50-day line at 33,600 and that early 2022 resistance line at 34,300, and we're waiting for an end of day close outside those two parameters. If we break down, which is less likely, we hope, it's down to 33,000. If we break to the upside, which probably is more exciting given the way that we've been bouncing off that 50-day line, then we're looking for 36,000 as soon as the end of next month. Could be sooner, which sounds rather unlikely, but the reason for saying that would be that we have a sort of a log jam breakout, and that tends to be the case that where the longer market remains confined within a tight range, the bigger the breakout that subsequently arrives. Moving on to Bitcoin, where we are looking for a big breakout, obviously to the upside. Here we've got this, we had this nice little bear trap rebound above the 50-day moving average, and now we've got this bull flag basically based around the 24,000 level. Nice little range between 24,000 and 25,000, roughly 25,500, which takes us to post-June highs. End of day close through 25,500 should take us up to 30,000, which is the top of that broadening triangle from June, which we've been looking forward to for quite some time, and previously calling that to happen by the end of next month. There is, I suppose, a small chance it could happen before the end of this month. On to the stocks, and here you can see that start off with Clontarf Energy, which I just noticed today, even though I've covered it quite a few times in recent days, that we've had not only an unfilled gap to the upside above a rising 50-day moving average, but if you look at all the candles in over the last 4 sessions, all been very, very positive candles indeed. That suggests that there's much more to come. End of day close through 0.21 could be enough to get the shares up to as high as 0.36 or 0.37, which is the top of that June gap to the downside. So that would be, well, I suppose the Clontarf fans would be very excited by that and very pleased as well. Next situation is Corcel, which has been in this broadening triangle since July. Hasn't made that much progress over the recent past, but we have had for February a break above the 50-day moving average, which is now rising. We've gapped up as well. So that does suggest that we're ready to break to the upside. Initially, obviously looking for 0.4, which was post-August resistance, but after that, maybe up over the next 1 to 2 months as high as 0.55 or 0.57 for Corcel. Only well below 0.2, really upsetting the idea of recovery. On to Hydrogen Utopia, which is celebrating that it got a mention in the Sunday Telegraph yesterday with a gap to the upside. Also with a break of the recent resistance line there from when it came on to the London Stock Exchange. So above 13.5 pence, looking for at least 17 pence, which would reclaim the initial resistance the shares had back in January. Moving along to Mosman, which seems to have completed a decent fundamental news item today. Here we've broken the 200-day moving average, or we're trying to break the 200-day moving average at 0.07. Above that, we're looking for 0.1, while we hold above 0.05.5. So just waiting for that breakout there. Nice bounce for the RSI off RSI 50, the neutral level. So that does suggest that we can, or we will see, follow through on today's move. On to Mode Global, where we thought that was perhaps it, but just looking at the charting situation, shares seem to be trying to find support above the 0.5 pence level. Little range there between 0.5 and 1.1 pence, barring any fundamental intervention. Obviously, it's difficult to speculate what that would be, but at least on a technical point of view, we've got 0.55 to 1.1 pence as the range there. If you're cautious, you might want to see the RSI get above the neutral 50 level before deciding to take any action, or you might just step away entirely given the recent history of the company. Moving on to Oxford Biodynamics, which had a bear trap below 15 pence last month. Unfilled gap to the upside, bear trap island reversal as well. If you look at the gap down, the gap up, and a nice V-shaped bull flag there above the 50-day moving average at 17 pence. Above that, we're looking for an easy 24 pence at the top of that broadening triangle from back in October. Let's see if OBD delivers the goods on this occasion. Stock that's given lots to its fans over the recent past is Premier African, and beautiful setup here. We also already talked about the unfilled gap to the upside through 0.66. We've held the gap, we've held it well above the top of the gap there at 0.66, and above that looking for 0.8 relatively easily over the next week or so. An end of day close above the old, the recent February resistance there at 0.73 should be the trigger for 0.8. If you're a fan of the shares and looking for greater glory, which I'm sure quite a few people are, then we could enter a rather steeper trajectory within a September rising trend channel, and you can see the top of that channel is currently heading towards as high as 0.92, which could be hit by the end of next month. But remember that unfilled gap to the upside and that bull flag there looking very, very strong indeed for the bulls. On to a stock which doesn't get much coverage here, but might have another little run as it did a while back in November. Here you see Pineapple Power consolidated at old August support there around 2.8 pence, and above that we're looking for a retest of 6 pence, which was November resistance by the end of next month, and maybe up to 8 or 8.5 pence soon after that. But let's see if we can get through. I suppose 4 pence to be safe would be the level above that November resistance line, and the upside valid while we hold above 3 pence. One theory that I've had over recent weeks is that 2023 could be the year of the biotechs to recover, and one of them may be Proteome Sciences rather. Here we've broken or breaking that line of resistance there from 2 years ago, summer of 2021, and above 4.5, really looking for as high as 6.5 over the next 2 to 3 months, especially while we hold above that 50-day moving average area at 4.5 pence area. On to the last three, and the first one is Tirupati, which flagged very strong production news, and that is something I think the market's been waiting for quite some time. We've broken that line of resistance there from April last year at 32 pence. Above that, looking for a minimum at 40 pence at the 200-day moving average, and then after that, maybe by the end of next month, up to 50 pence. We've been looking for that 50 pence area for quite some time. Hopefully today's news will do the trick, especially given the way that we've got an uptrend line in the RSI window, which should provide momentum for the shares. It looks as though basically anything under 30 is a buying opportunity on a technical basis for the stock, so I wouldn't expect to see it go back below 30 after the latest news. 10 Lifestyle is next, and I'm going to type in the right ticker code here. We've got a rising trend channel. Looks like it's quite wide from September, and the breakthrough 90 pence and above 90 pence could take the shares up to as high as £1.30, perhaps over the next 1 to 2 months, and maybe going into April. Beautiful progression there. Unfilled gap to the upside through the 50-day moving average to start off, then another one, and then that sideways consolidation, and after another unfilled gap to the upside, just looks like almost like a perfect charting progression there for 10, and would have little doubt that £1.30 could be on the way relatively soon over the next couple of months. Finishing off with the Upland Resources, where there's been a premium placing, a rising trend channel there from July, support recently at the 0.5 pence level. Looking just for an end of day close through the 50-day moving average, which is now rising, so that should be a foregone conclusion. Above that at 0.63, looking for a pound, or rather a penny, probably looking for a pound as well actually, but looking for a penny initially to be hit well before the end of next month. That's it from me today. More updates tomorrow.